Hello my fellow freedom builders and welcome back to the channel. In today's video we're gonna have a look at gurus. Now I put a picture of Warren Buffett in here, but of course there are tons of different gurus, and what could be interesting is to have a look at what stocks many gurus are going for, because of course they have different approaches. Some of them are value investors and they can have a ton of different angles to investing. But if we can see a lot of them are going for the same stocks, then maybe we should have a look at them as well. So that is what we're going to have a look at today, and we're going to have a look at 5 specific stocks, and I'm going to show you how I'm finding it. Remember, this weekend I am also picking a winner for the 1 ounce silver coins, so remember to put a comment in the comment section below, and also of course subscribe and like the video if you find it inspirational. So let's get straight to it, and what I'm going to look at here is the platform called Gurufocus. And of course, they have a lot of focus on gurus. That kind of says it in the name here. But what I'm going to look at here is something they call the S&P 500 Grid. And in that, we can actually have a look at, I picked net buys, meaning that we are going to have a look at the stocks where most gurus have, where there are most net buys of gurus. That's how I should say it. Meaning, of course, there can be gurus that are selling this stock. But if we go into Wells Fargo, we can see that there have been 23 guru buys and 12 sells, and that is 11 net buys. And then we can take them one by one. I've also chosen to look at S&P 500 companies, but I could look at all sorts of other sizes. But let's just have a look at the S&P 500 and just go through them one by one. Now, I'm only going to take 5 of them here. That is Wells Fargo, it is Carrier Global, it is Edward Life Science, T-Mobile, and Aon. But if you pause the video, you can see the ticker symbols for a lot of them here. I'll just scroll down here so you can have a look at them, and then you can go through them one by one when you have the time. So let's just start out with Wells Fargo, that has 11 net buys from the really big guys here. And when we look at them, we can take it into our fast graph platform here and have a look at how it looks. And as you know, if you have seen my videos before, the black line here is the stock price, updated once every month. The white line down here is the dividend payments. You can see Wells Fargo have been cutting their dividends and they are planning on raising them again at some point. And we can see that we have the earnings and the normalized PE here. That is the blue line and the orange line. If the price is below these two lines, or at least if they have been following it for a while and now is below, it signals to us that the earnings are growing faster than the price, and therefore there might be some potential value in here. So right now we can see that the price has dropped very far down, and that is also due to the big drop in earnings in Wells Fargo. But what they are estimating is that they are estimating some growth in earnings in the future. And now the price is down here, and if that in a couple of years should move up to be somewhere near the real fair value here, we can see that that would give us, and that is included the dividends, that would give us something like 43% per year on the Wells Fargo here. So it might be understandable why the gurus are going in here. Now, I'm not going into which gurus are taking these positions, which are buying and which are selling, but you can find all that on the Gurufocus website. It is a paid service though, but I think they have quite a lot of free stuff in there anyway. When we're looking at it here in Stockopedia, and you know Stockopedia if you've seen my videos, otherwise there's a link to it below here. When we look at that, we can see that it has a very high value score. And that is also maybe why a lot of the gurus are going into it, because many of them are value investors. The Gurufocus website is primarily a value investing website. What we can see here is they also have a PEG ratio of only 0.5, meaning that you're not paying very much for future growth in earnings. We can see that their earnings per share has been going down, but in 2020 they estimate 0 earnings, but then again rising in 2021. Now Wells Fargo is a bit of a special, because it is in the finance sector here. You can see the dividend, they have a dividend yield that is quite high, around 5% here in 2020, let's just see, and going down to 2% in 2021. However, they do have, or at least they have had, decent dividend cover if you are into that, so that they have actually been able to pay the dividend easily. Now, with the loss in income, of course, they will have a harder time paying the dividends, and that is also why they are cutting the dividends, which is actually a very decent initiative, I think, so they can get their dividend cover up again. So that is the Wells Fargo. If we're looking at on a chart here, we can see that we actually got a sell signal up here around 49 if we followed our trend following strategy that you know. Otherwise, look in the playlist called Learn My Strategy. I explain all about it there. So right here, right now, there's not really a trend. But then again, the gurus are not looking for trend in that way. They are simply trying to find value, at least in this case, I guess. So let's have a look at the next on the list, which is CARR, Carrier Global Corp. Now looking at the CARR, we can see they have a net buy of 10, meaning that they have 13 buys and 3 sells. So let's have a look at it here in the fast graph. Now we don't have much data here, and that is of course something that really handicaps us a bit, so we cannot really learn much from this one. And you can see that we don't have much data on them since this is fairly new. We can see, however, that they have a stock rank at 84. That is fair enough. The momentum is 97, and that is of course primarily due to the price momentum here, but we can also see that the overall stock rank went up here to 77 back in May 2020, and then the price has just gone up nicely ever since. When we're looking at it here, the earnings per share normalized has been dropping a bit. Free cash flow stabilized. There's actually not much data here, so we cannot learn much from this. We can see the analysts here are going for primarily a buy. So that is fair enough. As you can see, it is a provider of heating, ventilation, and so on. You can dig into that yourself. But that is one that the gurus are obviously buying. And that is maybe not because of the value, or at least not historic value, but more a perceived value into what kind of products they have and the future of the products. So let's just have a look at it here. As you can see, we have a price here going straight up, and that is actually, if we have been looking at this with our technical analysis glasses on, I would not have bought it, because I do like to have at least a couple of years of data where we're only looking at the daily chart. And you know, I like these bounces on the 20 SMA. Then we have had several opportunities, but I can guarantee you that these gurus that are running around with billions and billions of dollars to invest, they are not looking too much at least the daily chart. They might be looking at weekly or monthly charts. The next on the list is Edwards Lifesciences Corp. Now, as you see here in the fast graph, that is not really a true value investment here, even though there are, let's just see how many, there are 10 net buys, meaning 15 buys and 5 sells. When we're looking at the fast graph here, we can see that it is running a lot faster than the earnings, and it is also above the PE line here, the normalized PE line. So you could wonder why they would buy that. You would have to go into and study it a bit. But what Edwards Lifesciences here is doing is that they are researching a lot into heart diseases and different ways to treat that. So this would not be a normal value play, in my opinion. When we look at it here, we can see that it has a very good quality of earnings. That is a 94. A low value score, and that is the same as we saw over here. This is not defined as good value. And then we have a good momentum score. So overall 74 here, and a PEG ratio at 2.7. I do like them below 2, but sometimes if there are some different circumstances available here or present, I can take somewhere up towards 3 in the PEG ratio. They have a 6 in Petrosky score. They have a very nice Altman C score here saying that it is safe. When we're looking at the earnings, it is going up pretty much the way I do like it. The free cash flow also rising. They do not pay any dividends, and when we see their debt, it is actually negative debt. So that is quite fair. It is a 40 billion euro company, so that is quite large. When we're looking at it here, it took a big dip, of course, here this spring with all the virus stuff, but you can see before that, it has been a true growth stock here, going from what down here? Oh, that is amazing. Down from the single digit down here in 8, 9, 10, and then all the way up to 87 up here. So that is quite the journey. So what I think many of the value investors have been looking at, or people wanting to get in, is that we should remember these numbers are from back in late June. I think it is delayed numbers we are sitting on here, and we are getting the new numbers in a few days actually. But we should remember these gurus have been buying down here probably, so they have gotten a way better deal. So they have been buying on the dip down here. Some of them might actually have been buying way down here as well. So it might have been better value at the time. Right now, I would just wait and see, because it has been establishing quite a good trend. If I should buy this out of our trend criteria here, it would need a bit more of an uptrend before I really believed in it. It is not doing better than the overall market right now. So on to candidate number 4, which is T-Mobile with 9 net buys. Now, again, with this data being a bit old, we could go back and say, yeah, well, they were buying down here somewhere just above 100, and now it is up in 112. But maybe this is not too late. We should remember that if you want to copy or at least get some inspiration from these gurus, then many of them are extremely long-term investors. So if you are someone that wants to swing trade a stock, you should not try and look at this one and see, yeah, they are buying T-Mobile and then go in and swing trading that one. I would not recommend this. These are gurus that, at least many of them, when they are focusing on value investing, they are holding the stocks for years or maybe even decades. So what we are seeing here is that there is a price that has run significantly a lot faster, at least, than the earnings, and the earnings have gone down here. And this is not really one that I would take a position in from a value perspective, because if this one should go down to its own PE line here, we can see it would give us a negative rate of return on minus 12% here, which is not really what we're going for. When we're looking at the Stockopedia, we can see a stock rank at 81, which is okay, and that is primarily because of the momentum, but it has an okay value score and okay quality score. When we're looking down into the numbers, we can see it has been growing its earnings per share fairly over some years, but then it has dropped here in 20 and 21. And when we're looking at the cash flow, it is negative. That is pretty much a business I don't buy. I don't buy businesses with negative cash flow. There can be 1 or 2 instances where it is a very special deal, but in a company like this, I would personally not do it. They have been growing their debt, and there is some acquisition parts here as well, and that can interfere, of course, with the number of gurus that have seen this as a good case to buy into. But as you can see, it has a bankruptcy risk, the Altman C score down here, getting close to the red zone, and that's not really what I like to see. And interest coverage and only 3, that is not in the high end, and current ratio and quick ratio also in the low end. This is not a company I would actually expect to find on the guru list here, but there might be some reasons for buying it that we could dig deeper into them to find out. The last one I'll mention here today is Aon with 8 net buyers, and that is 10 buys and 2 sells. Now, Aon has been a true growth story. Look at this, back from 2011 here, we had a stock price around 42, and it went all the way up to 220 here. So that's pretty much 5x over 9 years or so. And there might have been a lot of these large investors waiting to get in, but simply saying that this price was getting up too high. And then when it dropped here in the spring, they started to buy because they thought it was basically a good business. And they might be right. What Aon is doing is that they are focusing on some risk solution for businesses, on reinsurance and so on. So it is a large financial company. And as you can see, the earnings quality is great. Value is not amazing right now, but this number will have been a lot better when the gurus were buying. And should I say that in a week or two, when we are getting the new numbers, I think that is in a couple of weeks, I might make a video more like this, simply to see if the top 5 has changed a lot. I suppose they will have changed. So let's have a look at it here. When we're looking at this one, we can see that their earnings per share normalized are going up very nicely. That's what I like to see. Free cash flow also, they took a dip in 17, but then going up after this. You can see they're paying a dividend. It is not a huge dividend, but it is growing nicely with 2 and 5 and 10 and 9% per year, and the dividend cover is very reasonable, way above the 2 that I like to see. So if you're going for dividend, then this will of course slowly just grow up and getting close to 1% and then maybe 2% in a more distant future, but with a lot of security built into it. Net debt here has been brought a lot down. That is very nice. We like to see that. Interest coverage has gone up by that. The current ratio and quick ratio are low, but that might have something to do with the business they are in, the reinsurance and so on. They are rated a buy here, and yeah, pretty much a quite stable business. Looking at the charts here, you can also see that we have had a very nice growth story here. Yeah, from way down here at 2030 and then up towards the 240 up here. And again, there might have been a lot of these gurus sitting on a lot of billions and saying, when we see a drop, then Aon might be one of the stocks we want to dive into. And when the stock came here and the gurus could see that we were pretty much on the upside again of starting a bull trend, then they might have been just starting to buy up down here. Right now, it is not in a trend I would like to see. It is underperforming the overall market, but I wouldn't say that at some point, if it came up here and showed some true strength towards the market, then it might be a stock I could have a look at. One of these stocks, funny enough, if we take a look at them, then the EV, the Edwards Life Science Corp here, actually also have kept popping up on my own screener. You know, this is the screener. I can just move it up a bit here. This is the screener I have built for my Danish subscribers. And as you can see here, the Q score, that is my own quality score. Edwards Life Science is actually in the very top here with an 8.4. And a relative strength score towards the stock universe I'm looking at 58. I do like to see that above 50, so that is great. And pretty much a very solid stock here that has been lying in the top for a very long time. So funny enough, that one should pop up here. So that would probably have been the one of the 5 that would have popped up on my screener and in my universe with a potential buy at some point. But these are the 5 top. As I said, you can keep going down here. Of course, there's also a bottom that you can look at here. Funny enough, and of course this is in Q2, we actually have Microsoft down here with 24 in net sales, where that is 38 gurus that have been selling that off. And I think we have been looking at Microsoft before down here. We can just have a quick glance here at Microsoft. And what we see here, and I mentioned that in my video where I took a look at some of the FANG stocks and took Microsoft with as well, then Microsoft has been doing well, but from a value standpoint, it has been absolutely terrible because it has grown a lot faster in price than it has in earnings. So even though they are doing great and growing in earnings, also amazing numbers for such a large company, then from a value standpoint, if the price should down and smell to this value part again, you would over the next couple of years lose 8% per year. That is not necessarily going to happen, but it's just to tell you how many of these gurus might be thinking. So we are finding Microsoft and Oracle, and we are finding Alphabet and Cisco and Adobe and Lowe's Company down here. But as I said, this might have changed a lot when we get into the new numbers that is coming out soon. So keep an eye out for the next stock in a couple of weeks. I guess I will have that one made, where we are going into the new guru matrix here to see what has changed. That's all for now. Remember to subscribe, like, and all that jazz down there below the video. Take care of yourself and your money out there, and I'll talk to you again very soon.